The most frustrating feeling in trading is not losing money. It is having a strategy that you know works, a system you have tested 100 times, but finding yourself entirely unable to execute it when the actual moment arrives. You stare at a perfect setup on your screen, all your rules are met, but your hand literally will not click the buy button. You sit there, frozen, watching the market do exactly what you predicted it would do, and you make $0 from it. If you have ever felt this specific type of paralysis, your strategy is not broken, your trust in it is. You are experiencing the invisible erosion of edge. You try to fix this by adding more indicators to your chart. You watch 12 more hours of trading videos. You switch from the 5-minute time frame to the 15-minute time frame, hoping the candles will be kinder to you. None of this fixes the hesitation. The solution is not on the screen, because you are not abandoning your strategy because the math suddenly stopped working. You are abandoning it because of psychological fatigue. Your survival brain is treating normal statistical variance as a permanent existential threat. Here is exactly how your own mind is secretly sabotaging your edge without you even realizing it, and how to stop it today. What destroys your confidence faster? Losing 10% of your account in one single massive red day, or slowly bleeding that same 10% over 2 grueling choppy months? We naturally assume the huge red day is what breaks a trader. It is violent, it is shocking, and it hurts. But reality is much darker. Drawdowns do not break traders. Recoveries do. When you take a massive loss, the shock eventually wears off. But when you spend 2 months taking a small win, followed by a small loss, followed by a break-even trade, your brain starts to melt. It is not how much money you lose that destroys your trust in a system. It is how long the losing period lasts. You are suffering from the duration versus depth trap. You prepare your psychology for a sudden crash, but you fail to prepare for the slow, grinding boredom of a sideways market. Prepare for the duration of the pain, not just the depth of it. Knowing how to survive that pain is exactly why I wrote my new book. When I worked as a data analyst for a prop firm, I had unrestricted access to the back-end servers. I analyzed the raw data of thousands of funded traders to find the exact mathematical difference between the 1% who cash massive payouts and the 99% who slowly bleed their accounts to death. I took all that classified data and put it into this book. You get the actual server metrics, the exact win rates, risk to reward, and daily loss limits of the top 4,000 traders. More importantly, it gives you step-by-step mechanical rules to physically force patience, stop overtrading, and survive drawdowns without losing your mind. It is time to mechanize your mind and take what is yours. You can grab your copy through the link in the description right now. Now, be honest with yourself for a second. Has a massive, beautiful winning streak ever made you a significantly worse trader the very next week? You string together 7 perfect wins in a row. You feel completely untouchable. You start calculating how soon you can buy a boat. The hidden flaw here is that your brain subconsciously recalibrates your baseline expectations to a completely unsustainable level. You start expecting every single trade to be a home run. Then, normal market behavior returns. You take a standard loss. But because your brain is high on the winning streak, you panic. You over-leverage your next trade to get that godlike feeling back, and you force a setup that is not there. The winning streak actually set the stage for you to abandon your strategy the moment reality set back in. Are your minor system tweaks actually improving your edge, or are they just sophisticated forms of self-sabotage? You start missing a few trades. You feel a little insecure, so you add a simple moving average to the chart. The next day, you tighten your stop-loss rules by just 2 pips. You tell yourself you are optimizing. You are being a smart, analytical trader. Adding indicators is actually a trauma response. When a trader loses trust in a system, their first instinct is to plaster more filters onto the screen to protect themselves from being hurt again. More data is usually just a bandage for less confidence. You are not increasing your accuracy, you are just decreasing your frequency of taking trades. Stop tweaking your system while the market is moving. Only optimize in a dead, silent backtest. Why does your brain care more about what happened in the last 48 hours than what the last 2 years of testing just proved? You have 300 trades in a spreadsheet proving your system has a 60% win rate. The math is solid, the logic is sound, but your last 3 trades were red. Your brain looks at those 3 red trades and instantly concludes the strategy is completely dead and the market has permanently changed. The human brain assigns 10 times more emotional weight to recent events than historical facts. It is designed to run from the tiger that is in front of you right now, even if that tiger is actually just a red candle. You are literally throwing away a year of positive, hard-earned data because you had a bad Tuesday, which leaves a deeper, uglier psychological scar. A trade that instantly hits your stop loss the second you enter, or a trade that goes 90% to your profit target and then reverses to take you out at break-even. Before the reversal, you are up 3 times your risk. You feel incredibly smart. You are already spending the money in your head. Then the market shifts. It turns around rapidly and stops you out for nothing. You feel robbed. You feel like the market reached into your pocket and stole cash that belonged to you. The next time you are in a trade and it goes up slightly, you panic and close it early because you are terrified of that pain happening again. Profit evaporation damages your trust far more than a clean, instant loss ever could. If you follow your trading rules perfectly, exactly as you wrote them, but the trade still loses money, do you still secretly feel like you made a mistake? On the surface layer, you say it is just a normal loss. On a deeper layer, you think you must have misread the chart. On the deepest layer, you feel like you are just not smart enough to do this. Intellectually, you know a 60% win rate means you will have 40 losing trades out of every 100. You know this is a mathematical fact. Emotionally, however, you treat every single loss as a direct insult to your intelligence. You are tying your self-worth to a random market fluctuation. The math means losses happen. Your ego is what tells you that you failed. Are you trading what the chart is actually showing you, or are you trading what your ego desperately needs to see? You take a trade, it immediately loses money, and when you review your chart at the end of the week, you cannot even figure out why you entered it in the first place. If you look closer at your mental state in that exact moment, you will uncover the truth. You were in a drawdown, you were hurting, you were seeing phantom setups purely because you needed to recoup your losses. You were hallucinating patterns to stop the pain. This leads to losing trades that should not even be attributed to your strategy in the first place. You blame the system for failing, but the system never told you to take that trade. A very confident mistake is still a mistake. Has looking at another trader's success on social media ever made you exit a perfectly good trade way too early? You are sitting at your desk, following your rules calmly. Then you open your phone. You see a 19-year-old posting a $10,000 profit screenshot from a beach somewhere. Suddenly, your steady, slow strategy feels broken. It feels too slow. You assume you are doing something wrong because you are not getting rich fast enough. You force a terrible setup just to feel productive. You lose money entirely because you failed to realize that you and that teenager on the beach are just trading different market cycles with completely different risk profiles. Comparison does not just steal your joy, it actively steals your money. Deep down, do you prefer a boring strategy that quietly makes money, or a highly complex strategy that makes you feel like an absolute genius? Traders naturally want to make money. That is the goal. Yet they constantly abandon the exact simple strategies that actually generate profit. Good trading is incredibly boring. It is repetitive. It requires patience. If you break your rules, do something crazy, and win big, it actually destroys your trust in your system. It teaches your brain that acting wild pays more than following the rules. You start craving the dopamine of complex analysis over the quiet boredom of simple execution. You want to feel smart more than you want to be profitable. Embrace the boredom. Boring pays the bills. Excitement drains the account. What hurts your soul more? Taking a perfectly valid setup that happens to hit your stop loss, or skipping a perfectly valid setup and watching it run directly to your profit target without you? After a losing streak, you start skipping your best setups. You see the entry criteria, but you sit on your hands. Why does this happen? Your brain is desperately trying to protect you from feeling any more pain. It thinks it is saving you. The reality is that skipping setups guarantees you will miss the exact winning trades that were mathematically supposed to pull you out of the drawdown. You cannot cherry-pick statistical variance. You have to take the trade. If your system has a proven 60% win rate, are you mentally prepared to endure 8 losses in a row without changing a single rule? We comfortably expect a winning strategy to look smooth. We think it goes win, loss, in a nice, gentle pattern. Statistically, traders capitulate and change their strategy at the exact moment their mathematical losing streak is due to end. Cluster variance is ugly. A 60% win rate in real life often looks like 2 wins, followed by 8 terrifying losses, followed by 9 beautiful wins. If you panic and abandon ship at loss number 8, you endure all the psychological torture and entirely forfeit the 9 wins waiting for you on the other side. Are you losing money because you arrogantly demand that the market makes sense to you every single day? You abandon a strategy after a string of losses. You tell yourself the strategy is broken because you cannot logically explain exactly why the last 3 trades failed to move in your direction. The market is completely random on a trade-by-trade basis. It does not owe you an explanation. It does not care that you read a book on candlestick patterns. You cannot explain the microscopic actions of millions of other human beings buying and selling. Stop demanding micro-explanations for every single red candle. Trade your larger mathematical edge and let the small mysteries remain mysteries. Has the pressure of needing to make money this week ever actually helped you trade better? You find yourself forcing trades that are not clearly there. You enter early. You hold too long. The deeper problem is not your chart analysis. The deeper problem is that you need to make $500 today to pay your rent or buy groceries. You are projecting your immediate personal financial needs onto a strategy that has zero awareness of your life. The market does not know about your car payment. When you force a timeline onto an environment that operates on random probability, you break your own edge. You must detach your personal financial timeline from the market's opportunity timeline. When the market gets extremely volatile and scary, do you lean heavier into your rigid rules, or do you throw them away and start trading based on a gut feeling? You often tell yourself that you abandon your strategy because you just have a terrible discipline problem. You read the books. You studied the charts. You built a system that makes perfect logical sense on a quiet Sunday afternoon when the market is closed. Then Monday opens. The candles start flickering like the heart rate of a hummingbird on espresso. Suddenly you are clicking buttons based purely on terror. You think you lack discipline. The truth is much stranger. Discipline is actually incredibly easy when you have absolute, unshakable proof that a system works. You do not lack discipline. You lack statistical conviction. When you finally truly trust the math, you will never need to rely on your gut again. Trusting a trading strategy is not a one-time decision you make on a weekend. It is a daily, active psychological battle against your own biological survival instincts. Your brain is a beautiful organ designed to keep you alive in the woods. It is absolutely terrible at managing a leveraged financial account. Look closely at your trading journal tonight. Are you actually losing money because the math of your strategy is fundamentally broken, or are you losing because of one of these 14 microscopic acts of self-sabotage? You are effectively trying to fight a math problem using your feelings. The math usually wins. Pick one of the questions from this list that hurt you the most to hear. Answer it honestly in the comments below. Let us diagnose the real issue together. The edge you are looking for is already out there. You just need to finally get out of its way.